The Bulls versus the Bears. Get in the game. www.tackletrading.com.
This is Matt Justice for Tackle Trading, here to give you the Forex Report for the week of October 20th. It's a pleasure to be with everybody here this week to talk to you about a little bit about what's going on in the currency market. And you know what? From last week's Forex Report, there really isn't that much changes. We haven't seen a whole lot difference. I mean, we did get some downward movement in prices last week against the dollar, in terms of the dollar weakening against other currencies out there, but kind of rebounded a little bit late in the week, and most patterns have still held their ground. We haven't really seen any changes in the patterns out there, no momentum, and overall I'm still bullish on the dollar. If you had to put a scale on it, 0 being neutral, +1 being slightly bullish, +2 being bullish, I am a +2 on the dollar right now. Currently, we're looking at the dollar index, and as you can see, we do have increasing momentum upwards with a little bit of a retracement. And if you use a little bit of a retracement tool here, we retraced into the 38.2% retracement level. That's a pretty standard retracement that we're seeing out there in the marketplace. And as we can see, right around the 85 area, we have found some support, although I do think it's going to be volatile based on a lot of news, especially coming out of what's happening in Japan and as well as the Eurozone now getting into a slight quantitative easing business. I do see the dollar strengthening against the other major currencies out there for I would say the foreseeable future, unless something else comes out that we just don't know. Now let's go through a little bit of the ones individual. We did mention the euro. The euro made an announcement today that they were going to start buying covered bonds. That is code for we're getting a little bit into the Q&E business. That is quantitative easing, where they're buying bonds, trying to stimulate the market out there. You're seeing them buy French bonds as well, municipal bonds. So it will be interesting to see how that impacts the euro. Upon the news, it went down a little bit, but it has responded. Once again, nothing really has broken my overall trends on the euro. It really hasn't broken the trend lines on the euro. I thought we were going to get a big downward movement in price last week. Obviously, it rebounded and came back up. But again, I mean, you got to focus on the overall bigger picture here. And in the bigger picture here, we still got a nice little downtrend. And if we can play a little bit of connect the dots here, you still have that nice trend line coming down. So I do foresee the euro devaluing against the dollar. And once we get some confirmation coming down, maybe a movement down underneath the 1.275 level, I think that could be an entry of a selling of the euro and buying of the US dollar. Like I said, I'm looking to leverage my money and buy US dollars right now, and that seems a little weird given the macro problems with the dollar. But technical analysis is king. We gotta follow the trend, and right now we have increasing momentum to the downside. I am a -2 bias on the euro right now, and I do see the euro devaluing against the dollar over the foreseeable future. So I'm looking at this little pullback here. As you can see, the downward movements in price, upward movements in price. I'm looking at this as an opportunity to sell, certainly not to buy. So I'm looking at to get into there. You don't want to get in unless you see that downward movement in price first. The next currency I want to look at is the Japanese yen. The Japanese yen, this is the US dollar yen, and we had a couple of Prime Minister Abe. We had a couple of his secretaries and whatnot. I don't know exactly how you refer to them over there, but they resigned over the course of the night. And when you saw the announcement, the US dollar went up. It is coming back down a little bit. I'm looking at this as a potential entry price on the yen. Let's switch this down to a 15-minute chart to kind of see, to give us an identification of where we want to get in. Currently, we got an intraday downward movement here. I think if you want to be aggressive, you would get in right above this level right here. That's at the 106.95 level. If you want to be a little more conservative, wait till it gets up above this level here at the 107.05 level. So you're looking at those two levels where you would potentially get in. Switching it back to the daily chart on the yen. and we'd be looking at getting into it at that level right there at about 107. So let's erase those lines. Let's look at the next one. Another currency right now I'm fairly bearish on is the British pound. So looking at the British pound, we're seeing a little bit of an upward tick on the pound against the dollar, coming into that 20-day moving average. Today is certainly not the day to go against the pound. I would personally wait for a little bit of a slowing momentum candle, maybe a doji, maybe a bearish engulfing, maybe an inverted hammer, something either tomorrow or the next day, Tuesday or Wednesday, where we have some downward movements in price. A little bit of concern is the slowing momentum we are seeing in the yen. If you can see this little movement here, it comes all the way down, sets support right there, sets support right there, sets support right there. That is slowing momentum. So any target on the pound that we see after some type of doji coming into, say, early tomorrow or the next day, you would only be targeting the 159 level, which is still a couple hundred pips and significant, but you would have to be a little conservative on the target. Let's go ahead and look at the dollar Swiss franc. I am looking at an entry point on the US dollar against the Swiss franc. Once again, today's not the day to do it. If we're looking at, let's wait till tomorrow for that upward movement in price. Two last currencies here, the Canadian dollar. The Canadian dollar is, the US dollar is showing strength against the Canadian dollar. It did break out last week as we anticipated, breaking out of that level, and that's a buying opportunity. I still see this as a US dollar buying opportunity against the Canadian dollar. And then the last one is the Australian dollar. Right now against the Australian dollar, I am slightly bearish on the Australian dollar. That doesn't mean I'm looking to get into the Australian dollar right now. I'm seeing a little bit of slowing momentum here. As you can see, a little double bottom here and there at the 865 level. You're seeing a little bit of consolidation between these levels right here. To me, that is significant, because what that means is that quick downtrend right here, that quick downtrend is over. Now, the overall trend is still slightly bearish, but that trend is over. So if you're looking to be aggressive on, say, a carry trade, for example, where you're buying the Australian dollar, selling the US dollar, maybe a close up above this level, you might be looking at something a little longer term. Again, that's aggressive because the overall trend is coming down, but we can still get paid money on the carry trade with the Australian dollar and the US dollar, but you would want to wait till it breaks out above there. And with the carry trade, you're looking to hold long term. You're looking to hold against evaluation long term. You're looking to hold another currency in terms of diversified long term. But once again, I would not even touch a trade like that unless it got up above that level. And even on the weekly charts, that's not much. More than likely, though, if you're looking to short it, it's under the 865 level, and we'd wait to see a close under that level. As you can see, over the last few weeks, we're really just consolidating here now between those levels. So before you take action on the Australian dollar, you got to make sure that it breaks out one way or the other. We do not know which way it's going to break out. I am slightly bearish as a whole. But coming back to the US dollar here, the US dollar has shown tremendous strength over the course of the last few months. And if you pull up a weekly chart on the dollar index here, as you can see, we're seeing just huge momentum in its long-term trends. And when you look at this little short-term downward movement, it's a little bit of a retracement coming in. I certainly see it from a longer-term perspective could retrace a little further, but this week we are slowing momentum a little bit in the dollar. This could be an entry price in terms of a long-term perspective on the dollar as well. I see that continuing. There's a lot of problems with many currencies out there, with the Japanese trying to, devalue their currency as fast as they can. Some think they might be trying to kill it, in terms of their Abenomics and whatnot, trying to stimulate exporting. The problem with what the Japanese are doing is we haven't seen the stimulation of their exporting. We've seen them devalue their currency. We've seen it impact price action in the Japanese markets to historical levels, but we haven't seen exporting go up with this, and that's what Abenomics was supposed to do, was to increase exporting. And kind of where I'm leaning right now with one of the problems associated with what the Japanese are doing is basically it's an extension of what they've been doing for 3 decades now, and we haven't seen a change in the Japanese yen. We haven't seen the Japanese economy get out of their stagnation, get out of their triple dip recessions now, which the Japanese marketplace is certainly, in my estimation, certainly going into. And so these whole policies, the quantitative easing policies, the Keynesian policies, policies, the Abenomics policies, they're failing, and they're failing dramatically. And even Goldman Sachs came out today regarding the Japanese marketplace and what they're trying to do with Abenomics, and said it hasn't worked. And once again, in my estimation, Goldman Sachs didn't say that, but in my estimation, it's because world demand in Japanese products has not increased. You're seeing world markets go to countries where they can import the same quality of product for cheaper, such as South Korea and China and whatnot. So when we're looking at the Japanese marketplace, maybe the problem isn't the value of their currency. Maybe the problem is the fact that their products that they're creating is not to the quality that, say, consumers out there in the marketplace can get for cheaper in other countries and whatnot. So it's going to be interesting to see what happens in Japan. I do got my eye on that Japanese situation fairly closely. I am very concerned about recessionary statuses in the Japanese and the Euro markets, and seeing how that will impact the U.S. marketplace. But from a currency perspective, that is the Forex report for the week of October 20th. Hope you enjoyed it. If you have any questions, hit us up there at tackletrading.com. You can catch me on Twitter at MattJustice13. You can also follow at Tackle Trading as well. For next time, until next week, hope you enjoyed.
Get in the game. www.tackletrading.com